Hey, welcome to the Blueprints to Buildings podcast. I'm your host, Glen Palmer, and on this show, I interview the movers and the shakers of the property development and real estate world. This show is supported by something few developers have quietly been using, getting their projects funded and sold faster without touching traditional 3D models. It's early, it's clever, and it's changing how people see off-plan property. I'll leave it there, but if you're curious, message me on LinkedIn at Glen Palmer Secure or check out the show notes below. Now, on today's show, I have the absolute pleasure of interviewing Michael Crow, who is a veteran in real estate and banking operator, CPA, broker, commercial insurance agent, who has scaled Shures Property Group to 600 million plus AUM before pivoting to build Rezy's plumbing, HVAC, and IoT driven risk reduction platform, now compounding at 25% per quarter. Michael, it's absolutely great to have you on the show. Welcome. Thanks for very much for taking time out of your busy schedule. So, with that further ado, shall we just jump in?
Happy to be here, Glenn. Looking forward to it.
Excellent. So, Michael, very first question, and I like to ask this to everybody because it
hmm
reminds me of me when I was back starting my career. And if time travel became a reality and you had a chance to go back in time to when you very first started your career in real estate development, that sort of thing, what advice would the person that you are now tell your younger self?
Wow, it's a great question. I've done a similar exercise in the letter you write to yourself at various ages in a group I'm in, YPO. So it's interesting, and I think it will answer your question well. I went to college, put myself through college, got a scholarship, worked, didn't come from money, and worked really hard. And I thought you're supposed to get a corporate job. Like I thought the whole goal was go to college and go work for somebody else. So I went for the biggest and best consulting firm I could find. I then went to a very large bank and became a CFO at a young age and managed. I was doing great, and I just had this passion for real estate. So I was investing and started doing real estate development on the side in small things, and this was in San Diego at the time, duplexes and doing fairly simple things, but it got
Mm,
to be where I was making more money on my weekend part-time work in real estate than I was as a senior vice president in the corporate group, and I wasn't having any fun there.
mm,
So my advice would be that, we don't know what we're going to do, but at that young age. But if you have a passion for something and you're good at it, if you have a passion and you're not good at it, maybe you shouldn't do it. This should be your hobby. But
yeah, yeah.
but real estate is always going to be with us. It's got cycles, it's got things to deal with. But it's been good to me, and I've gotten in and gotten out several times along the way, sometimes with better timing than others. But I'd say I would have gone straight into real estate, and I would have, I think, had a first 12-year corporate run that would have been better spent in pursuing what I was doing on the side full time.
Yeah. And it's surprising that a lot of people be in your position where they have gone through the corporate ladder only to realize that they're doing, I mean, perfect example is a friend of mine. He's gone through very similar story to you, very top CFO of a very big business, realized that he hated it. So then started going
Yeah.
into gaming, and yeah, and created this whole gaming empire, and that is just by something that he simply loved. So anyway, moving on. So you built Resi after owning, managing over 500 million plus in assets, and wrestling with reliability, cost, coordination across all the different trades. So, which specific failure modes in plumbing HVAC, whether it be water loss, response times, warranty drift, convince you to internalize the stack? And what measurable deltas, like either claims frequency, downtime, utility spend, of or NPV of avoided losses have you seen since?
I came at it, Glenn, from the commercial side. So I started getting into the trades in a serious way when I was spending $20 million a year in construction and services on my properties. So I
Mm-hmm.
said, geez, we're having trouble with vendors. Why don't we do this ourselves? So we got into it from working on our own properties and then eventually working on other people's properties solely on the commercial side. And I think we were good at solving some of our own problems, but we certainly had a transition working for other people. And I've since moved into the residential side of the business, which is another world entirely, going into someone's home and doing the same thing. So they're really like two separate businesses in a way.
Yeah.
So I think just specifically my migration from moving from owning real estate to servicing the real estate, as I like to say, I like to sell the picks and shovels to the gold miners now. It worked out pretty well for Levi Strauss and a few others. I and John Rhodes and Rhodesia, right? It's all the same
Yeah,
thing.
yeah.
Like you do really well on stable things, and so I went through COVID, and not getting paid many millions of dollars in rent, promises from the government and others, couldn't evict anybody. It was rough,
Mm.
and started pivoting at that. So happy I made the change. I think there'll be a time for real estate again, but it's a full-time activity. You can't part-time the real estate at that level.
No, definitely not. Definitely not, especially when you're talking millions. So
Yeah.
your use of IoT and AI to lower insurance costs, I find fascinating. First of all, because I love AI. How have data and automation changed the relationship between property owners, the underwriters, and the contractors? And what do you see as the next frontier for risk-based pricing in building systems?
Yeah, let me unpack that a little bit. I got into this from a background because we were having a lot of fires on our properties. So I had insurance losses of $12 million in 2 years,
Wow.
and they were all caused by either tenants or things that not building related, and insurance costs were going up. In some cases, we couldn't even get insurance again. So I said, well, how do we solve the problem? The IoT devices came in because of the prevalence of the bandwidths now, and you can use the gateways and the signals will travel 300 feet. So we got into it to solve a specific problem around that. And
Mhm.
when I met with the insurance companies and I said, look, this is going to prevent fires. Like we have all these data points that we can show you that said it's going to prevent it. They still said, sounds good, come back in 5 years when you have all the data. So kind of had to self-insure and get into this. And the way AI comes into play with this is the more data you have, the more history you have. And kind of the one of the breakthrough, and I did file some patents around some of this, is that the losses are caused by tenant behavior and things that are not specifically underwritten by insurance. They tend
Mm.
to look at age of the property, structure, some other aspects, more physical, tangible things. And those don't correlate, and I can prove this, that they don't correlate to the losses. So it's the best they have. So what I think AI does is it allows almost real-time dynamic monitoring and underwriting of properties based on how people are operating them and the quality of the tenants, which is if this ever becomes standard, which I hope it does, will transform the way property insurance is done for insurance.
Yeah. So do you think that it'll make it a hell of a lot easier for people like yourself to get insurance because you've got all of this data back behind you?
I believe so, and we're hopefully going to have next year a reinsurance company and kind of take some of that risk on and prove it, but that takes some capital partners that I'm needing to talk to and sort a few things out. So, uh, it's like everything. Someone has to be the pioneer, and hopefully you're not the guy with the arrow in the back while
Yeah.
everybody comes up behind you. But
Yeah.
I think we're in a great spot. I hope that we can lower insurance costs out there and people follow suit, and makes it more affordable to own these properties because people talk about interest rates in commercial real estate. I'm specifically talking about apartments, which was the area in the southeast I focused on. But it
Yeah.
was really the operating costs that were killing us, and insurance, payroll, delinquency. I mean, everything. Turn costs, water costs up 10% a year, year after year. Like, rents may go up at 3 or 4%, but our costs were going there. So we went from gross profit operating margins to 65%, and I was seeing 40% on fully
Mm.
occupied buildings, which is really hard to make the debt service payments. So
Yeah.
that's I think addressing the costs in real estate, which is how I got into the insurance, and using AI is the trend to try to take some of these costs out, and make it more profitable to own these assets.
Yeah. I do love your ethos. If if something doesn't work, I'll just I'll just go and
I don't know how else to do it. It's like, okay, well, I can't find anybody else to do it. I guess I'll have to be.
I'll
I'll
just
be
do it
the.
myself.
I put the guy in the room that raises his hand, right? What's the old thing in the army? They tell you don't volunteer for something, but I'm
Yeah.
volunteering for my own problems. And
Right.
and you learn a lot along the way. Like, I've not always been right. There's been a lot of uh, trial and error, but that's just part of the process.
Yeah.
What I like about what I do now is I understand as an owner commercial real estate, and I've owned other industrial and things too, but I really did focus on multifamily properties. And so I understand the pain points and the problems, and I'm trying to, whether it's plumbing and HVAC and these other things we do, solve
Mm.
problems, and that's what we need
That's
to do
it.
to add value, right?
Yeah, definitely. Definitely. So, with the tightening ESG rules, the rising utility costs, aging stock that you were talking about, all the owners prioritizing investment between building envelopes and MEP systems like the HVAC and plumbing, what metric do you personally look at first when advising a portfolio on value preservation?
Uh, if I understand what you're asking, in terms of valuing the property, or
Yeah,
in terms of purchasing it, yeah.
yeah.
Uh, you know, that people have different viewpoints. Like, I was buying a lot of multifamily properties in that time period, and I would buy at a 3 or 4 cap, and they'd say that's crazy, and I'd say, yeah, but I've looked at the numbers, and this I'm really buying at a 7 or 8 cap because they're not running it right, or they're whether it's raising rents or reducing costs or whatever it may be. So for me, I think the number one metric is always cash flow, and cash flow. The easiest way to define that, rather than cap rates for me, and doing it that way, is really yield on cost. It's just, what does this property throw off in cash flow that I can count on, and
Hmm.
then trying to make sure that I've got positive leverage between that and the debt service.
Yeah,
And if you've got a comfortable spread in there, which to me is about 200 basis points, that's a deal that I think you should take a serious look at.
yeah, excellent. So, many developers they struggle to show ROI on MEP upgrades to investors or insurers,
Yeah.
especially when they're trying to explain systems that are hidden behind walls and ceilings. So, have you explored using 3D or immersive visualization to demonstrate where the plumbing HVAC impact pre and post installation? And if you could really visually communicate one thing about Rezy's value proposition to your clients, what would it actually be?
Yeah, we're not using, not that familiar with any of the 3D visualization tools. What we're doing for our value proposition is to say we'll increase the cash flow and hence the value of your property. So the
Hmm.
return on investment from fixing these things always equated to reduced insurance costs, reduced water costs, and then the intangible side of raising rents, happier tenants, whatever, was just the gravy on it for somebody. So that seems to work reasonably well. Um, it's
Yeah,
always hard, as you pointed out, Glenn. Nobody goes in and rents an apartment property saying, "Oh, I'm going to pay more because I have great plumbing here." They just
yeah,
expect that it works, right? So,
yeah,
so it's the absence of a negative that kind of keeps them happy. If they don't have any problems and it's run well, they're going to stay with you and all that, which is the goal. And it's an interesting statistic that anybody who's listening that is in multifamily, I'd encourage them to look at more closely. is the true turnover rate and turn cost. Because when I ran the math on about 5,000 units, we were running about 55% turnover a year, and that was really unsustainable as
Mm,
turnover costs went from $1,000 to $4,000 a unit.
wow.
And and it's the national average is about 35%. So it's not small no matter what you're doing. So back to that, metric of what do you look at? It's all about cash flow, right? Everything we do, how we present things is cash flow, which equates to value.
Yeah, excellent. And coming from that development and background and banking background into this hands-on operation, what surprised you most about the service world? And what does the old sort of developer habits still serve you well when you're managing trades on the ground?
Yeah. Oh, God, I love the guys and hate them at the same time. They're just, it's like my children. I tell my kids, like, I love you all, but I don't always like you all the time. And I kind of feel the same way about some of the guys in the field, but they're great people. My goal is for them to act like an owner out there and do a great job and have a great life and long-term stability financially and all. So, um, the biggest surprise for me was the difficulty of finding great managers to kind of run things. I've struggled with because you either have great technicians who are great at what they do, but that's a different skill set than managing a fleet of
Yeah,
trucks or operations or customer service operations. And it's hard to find those people because what I find and I've said this to a few friends is the people I really want to run these things are doing it for themselves. They're
yeah,
already bounced out and they have the entrepreneurial drive and they know enough skills to pull it all together and start it for themselves. So it's often trying to find that good younger person who's got the talent and drive and skills to that, and then creating incentives that I can solve that problem for me because I've definitely gone through a few general managers and even hired a couple presidents that cost me a lot of money buying out of contracts because they couldn't run anything. They look better on paper than they did in the office. So
yeah, unfortunately so.
yeah,
Uh, yeah, well, Michael, thank you very much for being on today's show. Massive thank you for joining me. It has been an absolute pleasure having you here and learning
thank you.
from your experience and your insights. And of course, huge thank you to the listeners as well. But Michael, just before we sign off, if somebody wanted to know more about what Resi Services provides, how can they get in contact with you?
Yeah, it's the easiest way for me would be LinkedIn, which and I'm not active on Twitter or X, any of those things, but that and then crowcompanies.com is my personal holding company with the trades in there. They can reach me through that and see what else I'm doing. And resiservices.com is another one of the domains. So just reach out, email Michael at resiservices.com if you would like to email me or make an appointment to talk. Always happy to chat with people and meet great people to see what'll happen down the road.
Brilliant. Thank you very much. And that
Thanks,
wraps up
Glenn.
today's episode. If you're still wondering about that prop tech thing I mentioned in the start, good, you should be. Drop me a line and I'll show you what early adopters are up to. Thanks for tuning in to Blueprints to Buildings. I'm your host, Glen Palmer. I was speaking with Michael Crow, and I'll see you in the next episode.